You're a teenager, probably, and you want to get ahead of your peers by getting into stock market investing. Well, you're in good luck, because in this video, I'll be telling you my experience with investing and how you could get into investing. I'll be telling you how to convince your parents to let you start investing, all the way to strategies that you should use when you start investing. Make sure to subscribe, as I'm a small channel and I can take all the help I can get. Let's get into it. First thing you need to do is actually get permission from your guardians to actually be able to invest in the stock market. There are two types of accounts you can make. A beneficiary account, where your parents own the stock portfolio and all the stocks in it until you're the age of 18. Or you get a beneficiary account, which does the exact same thing, but you and your parents make a deal that they'll never do anything with it, and it's basically like it's yours. To convince your parents to allow you to get into stock market investing, I want you to tell them these two things. On average, the money in the stock market doubles every 8 years. That means if you put $10,000 in when you're 15, in 8 years, when you're 23, it'll be worth $20,000 if you put it into safe and smart investments. The thing that you should push them on is that the sooner you get your money in the market, the quicker your money will grow. A fair argument they may give is that the market is risky. This can be true if you get into speculative day trading or just in day trading in general. But if you invest in the S&P 500, which is an exchange trade fund or an ETF that tracks the top 500 companies in the US, you're going to be very okay. This ETF also increases about 8% per year, which is a lot. This should get your parents to allow you to get in the stock market, and the convincing part is done. Now it's time for strategies. All these strategies will be ranked by risk versus reward. The sooner they come, the more risky they are. But be careful who you listen to. I'm just a random guy on the internet, and you should do your own research and talk with your parents themselves. The first strategy is short-term investing. This is day trading, swing trading, and options. I do not recommend doing this because 90% of day traders fail, and people who trade options have sometimes lost hundreds of thousands of dollars because you can go negative for infinity, which is bad if a stock drops very low on a put. If you want to try and get into day trading, I recommend practicing on paper trading accounts. And once you win about 55% of your trades, then maybe you want to start playing with some real money. The next strategy is long-term investing, which I recommend everybody do. No matter which strategy you listen to as well, do long-term investing as well. I personally invest in the ETF VOO, as it's the S&P 500 made by Vanguard. It has a very low expense ratio and goes up 8% per year on average. I also invest in companies like Facebook, Apple, Microsoft, Disney, and other big companies, tech or not, that I feel like have a future because I use them or I see how good they are. I recommend investing in companies that you believe in, but they're also big enough that they won't drop too far. So investing in Tesla in 2007, not a good idea. The third strategy I've been trying recently is dividend investing. This is where you invest in companies that pay out dividends. Dividends are basically when a company pays you money for owning their stock. The power of dividend investing comes from the dividend snowball, which is when you buy stock, you get its dividend, and then you put that dividend back to the stock, either manually doing it or using a drip plan on a brokerage like Robinhood. This means that the dividend, you will continuously own more and more of the stock as you go on. Dividend investing also gives you more control over your portfolio, as you choose which stocks you invest in and not what an ETF says, which is good if you want to get better at trading overall, because investing in ETFs, you're not really going to get better at trading. Dividend investing is also shown to do better than long-term investing in the long term, like very long term, like 20, 30, 40, 50 years, but has also not been tracked as long as the regular S&P, so it could be false. There are also these really cool stocks called dividend aristocrats, which have outperformed the S&P 500 in the last decade, which is why I personally invest in a bunch of dividend aristocrats. Two of my favorite dividend aristocrats are Coca-Cola and AT&T because they have large revenue and they have a big future in my opinion. The main disadvantage of dividend investing is that you have to put time in the research and figuring out what stocks you want to actually buy, because if you make a bad choice, then you're going to lose all your money, unlike an ETF, where you just buy and forget. Hey guys, so right now I'm just going to do a little bit of long-term investing and dividend investing to show you what I mean. I'm going to search up. I'm going to go over to VOO and go to the Vanguard fund, which only has an expense ratio of 0.03. And what I'm going to do is that I'm going to buy $35 worth of this stock. And there we go. Now I just long-term invested. And then what I'm going to do is that I'm going to start investing in dividend aristocrats. So I'm going to go to McDonald's, which has a dividend of 2.3. into the stock. Done. And then I'm gonna go to Coca-Cola. There we go. What you can do is you can go over to your little icon on the bottom. What you do is you can go over to the menu. You can go over to investing where it says drip. And you can go down to where it says dividend and reinvestment plan. And what I'm going to do is I'm just going to make sure that all my dividend stocks have their dividends reinvested. I'm also going to reinvest into VU. And then all my non-dividend stocks I don't want dividend reinvest in. Make sure as a teenager that you take advantage of the power of compound interest. This makes selling stocks a pretty stupid idea, because if you sell them, then they're going to be worth more in the future on average as the market overall goes up. But if something, happens with the company, say Elon Musk decides that he wants to die tomorrow, then maybe you have a good idea to get rid of Tesla. If you think the video was useful, make sure to subscribe and share it with someone who you think will find the video useful, as I'm a small channel and I like to help people, and I think that growing me will help other people as well. So try to help me and other people. One of these videos over here, YouTube says is good, so I'll click them. Now, how do I say goodbye? My expert secret is that I go bye-bye.